Good afternoon, folks. Appreciate you guys having us here today. I actually took a few notes. I usually rip these off the cuff, but we have a really dynamic and interesting group of folks here that cover all walks of life, as you're seeing on the screen here. I thought it'd be valuable to bring in a diverse group of panelists here. Originally, when we were talking to TruStage, it was, hey, would you like to talk for 30 minutes about embedded finance? And as much as I would love to just tell you guys I know it all, I don't. So we have an interesting group here that can talk from the perspective of a direct-to-consumer brand, folks that work within credit unions, as well as from a credit bureau and data perspective. So I appreciate you guys having us. I'm Barry Kirby, the co-founder of Union Credit, and you all will see more about that later. But before we get started, I just want to take just a quick time to thank you all for sincerely coming out here. I know some of you guys flew a long ways here. You have families, you have careers. Some of these folks, this is 100% them just supporting the credit union system. And sincere thank you to TruStage. This is, for the folks who are new to the credit union space or maybe new to this event, this is what it's all about. These are folks taking time away from their day, their families, from their jobs to come here and shed light and provide a lens on what they see from this perspective. And we hope you guys can just unplug from your day-to-day, take it all in, and hopefully ask some good questions. And so that we will start off. So maybe we can start with just quick introductions and then start from the left to the start here.
Sure, sounds good. Good day, everybody. So Casey Mauldin, I am the Chief Revenue and Chief Lending Officer of Jovia Financial Credit Union, Long Island based, and of course with a Southern accent. I am not a Long Islander, but Long Island based and really gotten into the embedded finance over the past year and some change.
I'm Dylan Mathews with America's Credit Union in Washington State. I'm the VP of IT. Been with my credit union for a rather long time. Feels weird to say it. It's a quarter of a century, but 25 years, and kind of watched us grow from around 80 million to where we are now, which is about a little over 600.
Naga, for short, because my full name is too long. And I come from a company called Way.com. We're kind of a single app for all your car expenses, so whether it's parking, insurance, refinance. I look after product there.
Flynn, I'm with TransUnion, and I have the privilege of leading our credit union business there at TU. I come from the credit union space, so worked in 3 different credit unions over the course of 15, 16 years or so. I also help care for our community bank business, but we don't need to talk about that today.
I was going to tell you that before we got on here. Don't mention that piece. So. Just fun fact for you guys, because I think this is pretty interesting. I learned this at lunch maybe 3 months ago, maybe 4 months ago in California. Naga's prior career to this was, or a few prior careers before this, he was an ER physician and decided it wasn't exciting enough. And he was like, I just want to be on the TruStage, actual stage, because that's where the excitement is. And I was like, come on, let's bring it on. So.
Yes, my dad is still very disappointed.
So there, and if you see in his title, it says doctor, he legit is a doctor. So that's pretty cool and pretty awesome. So why don't we start here? So we're starting with the topic of embedded lending. I thought it would be a good just to set the stage to just give you just what the technical term definition is of what is defined as what is embedded finance, because there's a take on all of this. So I'm going to read that, and we're going to use that as kind of the starting foundation point to take this conversation. So embedded lending is defined as occurs when lending is offered through non-financial services or products. It eliminates the need to rely on high-cost third parties, like a financial institution, within the lending process. Instead, with just a few clicks, customers can access the capital they need right from those companies they have come to know and trust. The embedded lending market cap is expected to balloon to $7 trillion within the next decade. That's a pretty big number, by the way. One hallmark of embedded lending is that it allows companies to maintain control of their brand and their customer experience. To put into perspective how big that $7 trillion number is, in 2020, 2022, excuse me, the entire credit union ecosystem only made up 1.51 trillion according to the NCUA. So it's 7x what the entire credit union system did. So I'll start with our credit union panelists here, Casey and Dylan. So from the perspective of a credit union, hearing numbers like 7 trillion and that change, I mean, how do you guys process that, and how do you see that impacting you all from the lens of a credit union and a financial brand leader?
So a little bit of background on Jovia. Jovia is Long Island, and we were restricted by the counties that we served. And last year, I finished up an acquisition that gave us a national charter through a foundation. The biggest problem that we run across with the counties that we serve is that in New York, it is the lowest rate on loans and the highest rate on deposits. So that margin is the thinnest throughout the country and very financially sophisticated. So when I started looking at ways that we can end up getting more profitable loans and getting more profit within the organizations, embedded finance was clearly the way to go. That charter allowed me to be able to do so, and platforms like Union Credit are one of those that help us grow.
From my perspective, I hear those numbers, and it's just all potential. We're in a really saturated market, being in Washington State, around the I-5 corridor. It's hard to get a lot from what's there. So this is an opportunity to get out of our limited area of influence and bring in something that it's going to happen one way or the other. Like these loans, it's going to happen. We can be part of it or not.
Right. And for the crowd and for the audience, I mean, embedded finance is a newer term that's being applied to an industry, honestly, that's been around for 25 to 30 years. It's called indirect auto lending, is one example of it. You want to buy a thing, and somebody is facilitating a loan transaction so you can take your thing. Of course, in the fintech world, we have to give it a name, omni-channel. Now it's embedded lending. And so, but obviously it's advanced since then. So I'll ask this of Naga as an entity here that represents a direct-to-consumer brand. You know, one of the comments or the mentions in that definition was one of the benefits for you all is to maintain the relationship you have with your consumer, to own that experience. Can you talk to that? Is that a factual statement when they mention things like that?
I'm gonna have to say yes, right?
Yeah, that's the only answer you can do.
Cool. So yeah, we have 7 million customers, and our average age of customers probably 29 or 30, roughly, and hence, you know, we're very obsessive about customer experience on the app, and so we want to allow them to get anything they want, loan, with a very good customer experience. That's our brand across every channel, so it's very important to us.
And to pick on one thing that Naga had just mentioned, so their average user or customer is 29 to 31 years of age. So the published National Credit Union member today nationally is 54 years of age. Wow. So you can start seeing how relevant embedded finance is, because as a credit union system, we're trying to acquire the 29-year-olds because our membership is aging. And if we've done a good job as credit union leaders, we've prepared those older members, and hopefully they don't need loans and services. They're prepared for hopefully for retirement, enjoying the rest of their life. So this is kind of where you see the intersection bridging between what we do in here in the credit union land and the audiences that Way has. So Sean, I know TransUnion, you guys work with lenders outside of the credit union space. We won't name them, banks, and some of the largest credit card issuers and fintechs. Are they entertaining conversations like this?
Yeah, I mean, I think if you have to look at what's happening as an economy and as consumers and their behaviors to really understand this. I think, you know, you mentioned the age group that Way.com is kind of targeting or made up of. Consumers today, especially younger consumers, they want to engage through an app. They want to engage through something that's tied to a device. And so the two experiences, one of purchasing and one of financing, are converging, and they're converging faster than we've ever seen it happen before. And I think if you look at, like, you know, Ford is now selling direct to the consumer, and eventually there's going to be offering financing so that there is no F&I guy anymore, right? There is no F&I desk. And so whether that's, another example of that actually would be like the Points Guy, which is a travel website. If anyone in here's visited that site, you can look and see which kind of card recommendations they would give based on travel, based on what have you. That's where people are doing their research. That's where they're making the decision on what they want to do next. And so lenders are trying to put that offer there where the consumer is. So those two worlds are converging, and we've seen the largest card issuers, that's a major strategy for them right now. We're hearing about it from some of the biggest auto lenders as well. And of course, the fintechs have sort of been there and have been doing that. Not as much embedded in shopping experiences, but you're starting to see that a lot with buy now, pay later as well.
And I think that's one of the interesting points that I also kind of want to call out to is one of the questions I ask a lot of financial brand leaders is if you're trying to reach the 31-year-old, which is maybe Naga's user, how are they going to find you if they've never heard of you? Walk down the street and ask some young people, are you familiar with this so-and-so credit union? There's probably a good chance they've never heard of you. So the real thing is, if our education efforts are occurring on our website and through billboards or a branch strategy, is that the most efficient method if they don't actually know who you are? Is there an opportunity, and that's where embedded lending gets in, is there an opportunity to now connect that divide and come into the real estate of where they already are? They're on these apps. They're on Zillow. They're on the Experian app, TransUnion app. They're on way.com. That's really where it's all about connecting this very big bridge so that you guys can start educating and bringing in that next generation of membership. So this is for Casey and Dylan here. So keeping to the theme of embedded lending, so I think it's one thing to acknowledge the market opportunity, the $7 trillion number. What other, this is the pros and the cons here. What other aspects are you guys thinking about when you think about just the opportunity as well as the risk and just all aspects of that?
The one thing that's interesting about these types of programs is that you can get to where you want to be really quickly, and it seems like the machine is doing the work. Well, that's great, but I'm finding myself watching the machine more than I ever did before it getting involved because things were moving at a different pace. You'll find out really quickly, unless you keep your eye on the ball, that all of a sudden, funding's an issue right now, that you'll start growing rapidly. I love how I'm able to go through and throttle based on interest rates and be able to do it that way. So you still remain relevant, but you're also trying to achieve the goals of the credit union or financial institution.
This is like the first time I've actually seen the value in like that shift that happens when credit unions go to like the customer experience officer. Like, not to repeat anything there, but really making sure that, okay, we're getting the loan. Are we getting anything else? Mm-hmm. So actually having the right people work on this and making sure that, these members, at least in the case of Union Credit, they're actually selecting us. It's not like indirect where the dealer is maximizing whatever their income is going to be and selecting the deal that, will get the sale through and gets them the most money. These are self-selected by our potential members to us. Like they're out of state. Mm-hmm. Like that's a huge opportunity to further engage them. So making sure that, once these accounts are onboarded, that we know who they are because they're out of our area. We're federal. There's some interesting areas of our charter where we can really kind of engage anyone, but making sure that we know who they are and they've selected us, but why? Like making sure that we can get the savings accounts, get their deposits, checking, things like that. It's exceedingly important to make sure that we have the whole experience planned.
So have you found that you've had to, because the question we get from a lot of credit unions is, on one hand, I need new members and I need new younger members. But the second question from them is, okay, if we could give you that, the next question they ask is, what do I do with them then? Mm-hmm.
Yeah.
So have you guys found anything on the back end adapting, changing?
Oh, absolutely. Miscellaneous income streams are through the roof compared to what it was before. When you start partnering with the right people, you're pushing the specific products and services. Even on the indirect end, by doing these types of automated follow-ups, we're capturing, I think the last number we had, about 13% of our indirect, which are technically just, they're not members. But the reality is we're able to convert them over, and we're seeing high conversions because you're meeting the people where they are and where they want to be.
Yeah, precisely. They may not know where they've ended up exactly, but being able to engage them is important. And yeah, it's not like indirect where, once the loan's paid, they're out of there. Like they've, in some cases, selected a credit card. There's really no end for that. So as long as you maintain them, you can engage them. I'm also, just so you know, I'm also over digital marketing, not just IT, which is kind of a weird span of responsibility. But
He who wears many hats.
Many. At our size, you tend to wear a lot of hats. But making sure that there's a plan to engage those members because they've self-selected. They don't just they're not showing up at your door and going, oh, I guess that's who my lender is. They knew who they were and they selected us. In some cases, we engaged them and found out that they selected us specifically because we focus on military.
Right.
It's a large opportunity.
Want to share sort of an anecdote, if you will, but back to the point, like this is great about understanding what to do with these members. But I have a cousin who's 30 and she's a nurse in Phoenix, and she called me maybe a month or two ago, and she said, I hear about these student loan things. They're coming back into repayment. I think I'm gonna have to start paying my student loans again. And I've racked up some credit card balances, and I want to consolidate those balances. What should I do? And I said, well, first and foremost, I told her to go to her credit union. Then she said, what's that? So we had a nice conversation, but she said, I see that I'm pre-approved for this personal loan to consolidate debt when I go into my Credit Karma app. I'm already pre-approved. I can, or not pre-approved, but high likelihood.
Yeah.
Like I can move forward and I can get this loan really quickly. Why should I go talk to the credit union? I said, well, first off, you're going to get a better rate, and that's the most important thing for you here because you want to consolidate that debt and lower your payment. She said, yeah, you're probably right, but man, it just seems so easy to go through this app and just do it all right there. I don't have to call anybody. I don't have to get on the phone. I don't have to fill out an application and wait on a decision. Ultimately, and spoiler alert, she went with the credit union and it was a good decision for her. But I think as we think about what consumers are doing and where they want to receive things, they want to receive things through the channels they're in. They don't want to have to go do a whole lot of work. And we've been talking about that for what seems to be 20 years, is how do we meet consumers where they are? Well, I think the days of applying for a loan or coming into a branch, those are long gone, and this generation of kids, they're touching all these different apps for education, for gamification, what have you. And if you can be there and be present in front of them, that's when they're going to learn what a credit union is, and they're going to understand, that this is the product for me. I'm going to see better rates. I'm going to see a better term. So again, I think it's just about making sure you're talking to people that want the product, but they may not know how to go to you to understand what that product is and what they'd be eligible for.
That's a challenge, like deciding which is teaching about the easy decision isn't always the best decision.
Right.
Yeah, so one of the points in there, so if you guys, I'm sure you're familiar with Credit Karma, but if you go into the Credit Karma app, there's none of us in this room that are there. It's SoFi, it's Lending Club, it's Chase Bank, those are the lenders that are in there. And so I actually think this is one of the areas that credit unions can truly expand on. So a lot of the questions, coming back to that question of what do I do when that member selects me, I told somebody in an interview about a week ago, I said, they're like, what do I do then? And I was like, how about you just call them? There's a novel idea. We talk about member service. Credit unions have a very unique skill set, and that is we preach about member service and that we have humans here that are focused on your credit health and in our communities. Maybe that is actually a really valuable tool. Like, we don't want to be like Marcus. Like, there's nobody there for them to call to figure out what's going on. Marcus is a one-time transaction type of consumer who has 7 or 8 different banking relationships. Pick up the phone, call them, tell them, congratulations on your credit card. Here's this really cool checking account. Do you know about why these products exist? Like, that's what we were designed to do as a credit union system, was to educate people who are unaware of what a credit union is. And so embedded lending really is an opportunity for you guys to connect with an audience who doesn't know who you are. And so you have to have some type of human element. It doesn't have to all be automated. We're not going to beat SoFi on a technical level. It is what it is. But we have something way more special, and that is every credit union in this room could easily get a way higher paying job. Let's just call it what it is. But we do believe in what we're here for and what we're serving. And I think that's really one of the valuable things of what this could bring. So Naga, I just want to ask you a question. This is just kind of kicking around here. So when you were thinking about offerings, for example, the auto refinance offers within your platform, so could maybe you talk through from your lens as a direct consumer brand, the why, and then why credit unions?
So we've done insurance for the last 2.5, 3 years. So we have embedded insurance in our app. We now have 160 insurance carriers, all the way from Travelers to Liberty Mutual to people you've probably never heard of, Cure, Harbor Insurance, Bridger Insurance. And within a year, we wrote $100 million in premium, which is pretty awesome. So in the same way, when we started refinance, we started off with a couple of banks, and then we met Union Credit team, and they said, well, the credit unions give a much better rate, much better service, and that's when we first came across credit unions. So we're very new to the credit union space, but for us, the most important thing is our customers get the best deal and get looked after very well. Because if we're referring our customer to somebody, we want to make sure that they're looked after well. If not, they'll blame us for referring the customer. And credit unions have a lot of trust. So, that's why we're looking at credit unions to give our customers a good rate.
And I think that's a really big, important point to some of the things I pull out from there for you guys is we're hearing this from everywhere. So some of our partners are, Bankrate and Way and TransUnion and other folks is they're starting to realize that what is the best interest of their users, of their applications? What's in their best interest? I'll pick on SoFi again. It's not SoFi. The same personal loan, for example, that I was offered on SoFi, Jovia here was nearly 8% lower than that, and I'm not like a subprime borrower. And so they're thinking, shouldn't we, as these are my customers, if I'm Way, we need to be offering them the very best service and best institutions in there. And so I think really what I would encourage everybody here to just take away from this, and this is not like a sales pitch here, just so you know, what I would encourage you guys is as credit liquidity and the challenges that are in the market right now, we know they exist. They are what they are. I will tell you though, every credit crisis, 05 to 07, the COVID pandemic, all these credit crises, we have traditionally, as a credit union system, we're all guilty of it, we traditionally pull back. We bundle up. I know sometimes you guys have to do it. You only do so much. But when we pull back, we're providing oxygen to the next wave of competitors. SoFi came from the 05, 07 crisis. When we pulled back, they stepped in and they doubled down. In fact, one of the fintech providers who actually works with credit unions, and I'll leave them out of this name here, but they're in that SoFi lending club type of model. Their CEO is on quotation saying, as other traditional banks and credit unions pull back, we're doubling our efforts on new customer acquisition. I think that's everything we need to hear. So like in 5 years, if our members are average of 54 years of age now, and now they're 60, liquidity aside, everything else is irrelevant because we don't have the next generation of members. And that's the important thing. Whether it's us or somebody else, figure out how to connect with these younger audiences where they are, because they're not coming to your website. And I don't mean that to be critical of it. They just don't know who you are. They don't know who to type in there.
And I'll just say that that's one of the reasons why we've decided to partner with you guys. We think you've figured this thing out, and not to be a sales pitch, but I can attest to the fact that in probably 8 out of the 10 top largest card issuers in the country, and probably half of the largest personal loan issuers have this type of engagement strategy as a major focus in the next 3 years, next year and the 2 years that precede it. So your competitors are planning to engage consumers this way. And I think you've got a really good opportunity as an industry to pull together and kind of bring something similar to the table.
The one thing that I'll put behind that is this is a great time to get into it, because once everybody's in it, we have a theory that it's going to be a race to the bottom. So how low can you go? And right now you're able to capture some pretty good business at a pretty extended period of time. So being quick and meeting the client where they want to be met, we've noticed a very high adoption and very positive feedback from the members that we have acquired through these platforms.
Yeah, appreciate that. So I guess I'm buying drinks after this for those. I appreciate that.
So it's something I learned yesterday. One of the gentlemen that was talking, again, we're very new to the credit union world. He said something about adverse selection and positive selection. I think embedded finance, one big difference versus buying leads from LendingTree and everything else is you're getting much better customers than traditional people who just buy leads, because those are kind of the higher risk customers. I think embedded finance will definitely give you much better quality customers. And I've been told all loans are not the same. You all prefer better loans from the people I've been speaking to. And whether it's us or whoever else Union Credit embeds with, you'll get better customers.
Well, and probably a better loan than the 84-month term from the indirect dealer that you pay 2% on too.
Yeah,
Right.
that's going to run off the books in 29 months and go to the next refinance job. So,
And the account's closed. Yeah.
so I see we have a few minutes left. I guess questions from the audience. You guys have access to a direct-to-consumer brand. You've got a bureau here, and you've got credit unions here. So, ask questions, or we can just stand here and hang out for 3 minutes.
You don't want me to sing. I'm not good.
Yeah.
No.
None. All right. All right. So we'll wrap it up. So I will. We're pretty much at the time here. So again, I would encourage you guys. Again, it doesn't have to be necessarily with us, Union Credit, but I would encourage you guys to think outside the traditional box. This is bigger than just that's marketing's job. That's lending's job. This is way bigger than that. And this is not a scare tactic, but there is a true, genuine reason to have some urgency on how are we going to connect with the 30-year-old consumer. And I can tell you right now, a one-time CD isn't in their cards. 80% of members are acquired through the creation of a loan. I get you got liquidity issues. Think creatively, figure something out to connect to the next generation, because if we don't have them in a couple of years, this will be a much smaller conference. So again, I want to just thank you guys seriously for coming out here. I know you took time out of your jobs. It's a huge honor to have you all here to hear a different approach to this. This is an important topic, guys. You're going to continue to hear this thing nonstop all over the place from other providers. So I encourage you guys to listen. I appreciate TrueStage for hosting these folks. I hear there's an open tab on them. I may have made that up, but we'll assume it. Thank you, Brian. But yeah, I appreciate you guys' time, and thanks for having us.